We have 4 things we're going to talk about here in this video you need to know before tomorrow morning. Number 1, all of your Tesla stock news that has came out over this weekend that obviously you need to know. Number 2, bad news with this Israeli conflict. Things are not going in the right direction and there is not so great news we have to report to you. Number 3, the option positioning in Tesla stock in this upcoming week. If you guys watched the last video that was put out, historically speaking, Tesla should be bouncing this week. Are the options telling you the same thing? Let's find out. Number 4, major economic data coming out on Thursday. This is data we have looked forward to for well over a month. This is going to have big implications for possibly Fed policy, but directly correlated to bond yields. Are bond yields going to continue higher or are bond yields going to go lower? Well, you're going to have a better understanding of what might happen after this video. So that's what we're going to get into in this one. Hit the like button if you are a Tesla stock investor, you're looking to buy more shares of Tesla, or you just want to show support for this channel and for this video, as well as subscribe to the channel if you want to reach financial freedom as quickly as possible. Sit on the beach, drink Bahama Mama's margaritas all day long, or your favorite suds. It does not matter to me, but nonetheless, reach your goals and whatever your goals are, whatever you want to do with your life. Well, hopefully after watching this video and others to come, you are a wiser, smarter, and more profitable investor and or trader in our markets. At the very least, you know what's happening in the markets. Tesla's Giga Berlin thinks no soil, water, air problems with the factory expansion. There has been over 1,000 letters that have been received during the extended comment process, and Tesla is awaiting a discussion at Erkner. Tesla noted that many of the 1,000 objections are already considered in its expansion application, and Giga Berlin has undergone 25 occupational safety and health inspections in 2020, 48 in 2021, 40 in 2022, and 19 so far in 2023. Giga Berlin is committed to protecting the environment and protecting industrial safety. As you guys probably know by now, Tesla has been looking to expand Giga Berlin for a while and hire more employees to ultimately increase their rate of output, but there has been a lot of pushback by the local residents over these concerns. Really, pollution, contamination to the water system, and the use of water has been a big argument. It looks like some of these arguments, some of these objections are starting to get resolved. A new Tesla V4 supercharger in Beirut. The V4 supercharger was open, and this individual, 25 guns, was able to take some pictures of the components inside, and pretty dang cool. I don't think we've seen the inside of a V4 supercharger yet. Roland Percher reports that Europe saw a positive trend in BEV adoption in Q3. You're sitting at about 20% for the first time. As you can see from this chart, Q4 is always the highest quarter for BEV sales, and it's probably not going to be any different this quarter, and this current quarter is now Q4. Germany is by far leading the charge in BEV registration in Europe, sitting at about 165,000 registrations in Q3 alone. Behind that is other. And behind that, number 3 is the UK, which had about 85,000 registrations for Q3. From Q3, car sales were down 7.7% from last quarter. Despite this, BEV sales were up as the only fuel type. Diesel is at its lowest point in years, and gasoline is not far from it either. So the adoption wave for BEV vehicles continues. Roland Percher says, be greedy when others are in fear. Hashtag Tesla. P.S. Not investment advice. Here is how the new point of sale EV tax credits work in 2024. As we have talked about before, starting on January 1st, that $7,500 IRS tax credit, well, it's no longer necessarily a tax credit everyone can benefit from this at the point of sale by reducing the cost of their new EV vehicle by $7,500. Starting next year, buyers can get into a dealership and transfer their EV credit to the dealer. The dealer will sell the vehicle and either apply the discount to the price of the car or give cash back. This new system ensures that eligible buyers receive the full credit that the vehicle is entitled to, regardless of their end of the year tax liability. It also places the onus of juggling the tax credits to dealers. Dealers must be registered with the IRS to be able to participate, and the IRS is incentivizing them to participate by saying they will get paid back within 72 hours. The caveat is that we just don't know what models are going to qualify for the full $7,500 tax credit. This article from Autoblog says the Model 3, for instance, might only qualify for half of the credit in 2024. There also might be vehicles that don't currently qualify that join the list next year if they abide by next year's guidelines. So the guidelines are going to change a little bit, and we just don't have the full list of models that are going to be eligible. But nonetheless, Tesla is pretty good at working around the rules, so hopefully they get to the same point we are today, where you can buy basically any variant of the Model 3 or Model Y and get the $7,500 off invoice credit on January 1st, 2024 and beyond. And that should, in theory, help Tesla. It should help other EV makers as well sell more models, but specifically Tesla, that's really your brand name, at least here in the US. As you can see from this chart, the amount of recalls that Tesla vehicles are seeing is down dramatically. In 2022, there was 3.8 million recalls. Most of these recalls are not your typical recalls, like a GM or a Ford. A lot of them are over-the-air updates. And Tesla alone was 3.8 million out of 19 million for cars everywhere, representing about 20% of all recalls. In 2023, Tesla has seen about 430,000 recalls, only 2.7% of total recalls in the auto industry. So Tesla is clearly doing something right now. Mercedes-Benz EQ models have been slow to sell, dealers are reporting. Mercedes-Benz battery electric EQ models took an average of 82 days to sell at dealerships in September. Comparatively, vehicles across the overall luxury segment averaged 57 days to sell, while BMW vehicles took around 38 days to sell. Despite these vehicles not being sold nearly as fast as other vehicles, Mercedes-Benz did sell 10,423 EVs in the US, marking a 284% increase year over year, but still a tiny number compared to what you're seeing with something like a Tesla. A new study finds that the average ICE car sold today pollutes more than one from 2013. Increasingly heavy luxury SUVs are to blame. And we are seeing a lot of new Model Ys arriving in Belgium via this train. Literally hundreds of them, if not a couple thousand. This clip goes for over a minute, and the entire convoy goes for longer than that. Elon Musk was spotted at the F1 race in Austin with his son today. And guess what he was driving? It wouldn't be right if it was anything different. It's the Cybertruck. Brandenburg's Minister of Agriculture, Axel Vogel, says that Tesla's water consumption at Giga Berlin fell in its first full year of production and has remained steadily beneath the approved limit since. Tesla new sales service and delivery center in Gypsum, Colorado is almost ready to open. Let's now move on to number 2. this Israeli conflict and what has happened over this weekend. U.S. Secretary of Defense Lloyd Austin announced tonight that due to the recent attacks by pro-Iranian militias across the Middle East and the escalation we have observed in Israel, the U.S. Army will be deploying a terminal high-altitude area defense battery as well as several additional Patriot surface-to-air missile batteries to the Middle East. He also stated that additional troops have now been placed into a prepare to deploy status. While those are not exactly comforting words to our markets or for the average person that lives in this world today, this is now the 7th Hezbollah member that has been eliminated within the past 24 hours. All in all, about 26 members have been eliminated since this conflict started, raising fears of this Hamas-Israel conflict spreading into a larger regional conflict. The U.S. Senator from Connecticut, Richard Blumenthal, stated today while on a congressional visit to Tel Aviv that Iran did in fact give Hamas a green light to launch its surprise attack against southern Israel on October 7th, and that he is warning Iran against giving the same green light to Hezbollah. This appears to be a contradiction of what the White House has been saying, which is that so far there is no evidence that Iran had anything to do with the attack. Israeli Prime Minister Benjamin Netanyahu is currently holding a late-night meeting with the War Cabinet alongside senior security and military officials in Tel Aviv. This comes right after this phone call with the President of the United States. Joe Biden held a conference call tonight with the leaders of several NATO allies, including Canada's Trudeau, France, Macron, Germany's Scholz, and Italy's Meloni, and Britain's Sunak to discuss the ongoing situation in Israel. It looks like we're getting very close to the next stage of Israel's operation, which opens the door for a broader conflict, thus becomes something you really need to be watching in our markets. I've said it before and I'll say it again for the sake of being redundant so everyone hears it. This conflict could give you 10 to 40% downside if the US were to get involved, if Hezbollah gets involved, if Iran gets involved. At minimum 10%. At a maximum, if oil was implemented and there was a shortage of energy, if the Strait of Hormuz was cut off, as you could see, 20 to 30% of the daily oil supply comes through this strait. Iran and Saudi Arabia could easily choke that off. It's called an oil choke point. Then you could be looking at $10, $15, $20 gallons of gas, and that would have more so a 40% impact to the downside on our market. So this is definitely the number one potential risk catalyst to be watching for if you are an equity investor. And that's why I've kept you up to date with exactly what's going on in this situation. U.S. Secretary of Defense Lloyd Austin stated during an interview this morning that we are seeing the prospect of a significant escalation of attacks against our troops and people across the Middle East, and that we will not hesitate to respond if the conflict in the region continues to expand. Again, this language just does not sound comforting. The markets do not like uncertainty, and this is a whole lot of uncertainty. What's going to happen? Who's going to get involved? Is the U.S. going to get involved? Is Iran going to get involved? What economic effect is this going to have on the U.S. and abroad? What's the implication for oil, for inflation? There's so many unanswered questions just because we don't know how large this conflict could grow to be. Let's now switch to the third thing you need to know to start off your trading week, the option position and technicals for this week in Tesla stock. Why I personally like to pay attention to options is because it's a leveraged position that can tell you how people are positioning. Normally, if a hedge fund or institution is bullish, well, they're going to position bullishly. If they're not, then you're not going to see that. Now, over the past week, you've seen almost 5,000 hedge fund and institutional option trades come through. These are anywhere from $50,000 on the low end to 50 million, 100 plus million on the high end. The dollar amount was 6.83 billion with a positive order value of 53%. So even though it was a rough week last week, you still had the majority, maybe I shouldn't say overwhelming majority, but the majority of option dollars heading into Tesla were still positive by a margin of about 3%. That's actually incredibly strong. If we take a look at the positioning for this upcoming week, you are seeing a lot of activity around the 230 call. You had volume on Friday about 45,000 versus open interest of about 12,000. If you take a look at the $200 put, that's seeing a lot of activity as well. About 60,000 for volume versus about 15,000 for open interest. The 210 put seeing about 43,000 for volume. And 7,500, 7,600 for open interest. The 225 call seeing about 50,000 for volume versus 6,000 for open interest. And the 235 call seeing about 21,000 for volume on Friday with open interest of about 8,000. 225 mentioned that. The 220 also is pretty active with about 48,000 for volume on Friday with open interest of about 4,500. So a couple of the puts are pretty active. The 215 as well, seeing about 37,000 for volume versus 6,500 for open interest. 215's active. 210's active. 220 is active, and the $200 put is pretty active. But if you take a look at the calls, there is a lot of activity as well on the call side. So just looking at this, it looks like you're going to get a big move to the upside or to the downside. That big positioning around 200 or that bigger positioning around 230 looks likely to me. Now, for a little bit more clarity here, you could see the put to call ratio is 0.7 for this week, which is basically in line with what you have seen for Tesla over the past year. It's actually a little bit lower. I believe the current put to call ratio, taking into consideration all of the expirations, is about 0.84. So we'll take a look at that here in just a second. But if you see the open interest, it's at 58.78% on the call side. Put open interest is at 41.22% for this given expiration. So it does look like there's more call positioning for this week rather than puts. If you look at the volume on Friday, it was pretty much even. 49.68% of the option activity was calls, the volume, and 50.32% was puts. But again, if you look at the open interest here, you're higher on the call side, above 50 by about 8.78%. So there is more calls than puts for this upcoming week. Yeah, I was pretty close. The put to call ratio currently for Tesla stock as a whole is 0.85%. So this upcoming week is actually a little bit more bullish than what you're seeing for any normal expiration for Tesla. And if you take a look at the technicals, we talked about this a little bit more in the last video. Tesla normally bounces at the 30 on the RSI, besides back here in January. And obviously this was just massively oversold at that point. Tesla should have never been at $100 per share, but Elon was selling stock. It looked like Elon wasn't paying enough attention to Tesla. There was fears that Elon wasn't even, having a say at Tesla anymore. He just wasn't there, wasn't doing anything. That was obviously false, and all of that came and passed, and Tesla, went up to $300 following that $100 low. It was a great buying opportunity. Hopefully we can get another great buying opportunity, but this week I would expect at some point to get a bounce unless the broader markets do just fall apart. The NASDAQ is about 14% away from a new all-time high, and it's 28.5% higher than its 2022 low, which was set in October of 2022. So there's a lot of room for a downside move in this upcoming week, especially if earnings do not come in good. You're going to have Microsoft and Google on Tuesday. I think that's really going to set the tone for the broader indexes. If Microsoft or Google does not do well, it's going to be hard for the markets to do a whole lot of anything in terms of that upside move. You add this Israeli conflict getting worse into the mix. If you have bad earnings, you could be in for a really rough situation for our markets. There's a lot of people actually talking about a potential Grim Reaper coming for Microsoft. If you hear me talk about a Grim Reaper, that's like a 20% drop for a stock, or, just depends on what the stock is, I guess. A disproportional move on earnings based on just really bad numbers. Some people are talking about that Grim Reaper could be coming from Microsoft this time. I'm not sold on that idea, but it's not too far-fetched also, considering Microsoft is trading pretty much at all-time highs. Now, if you guys would like to come trade earnings season with us, come get access to my strategy that I like to employ to minimize your potential loss and maximize potential gains, well, check out that link down below in the description of this video. Like I stated in the last video as well, you do have other earnings like Visa is going to be important Tuesday after hours, Meta, Wednesday and after hours, IBM and ServiceNow. Thursday pre-market, UPS is going to be a big one. Thursday after hours, Amazon, Enphase, Intel, Ford, Chipotle. Those are also going to be big players for our markets, but I don't think Amazon is going to save the day if Microsoft and Google have bad earnings. Microsoft and Google are probably going to be the drivers of the broader index, probably throughout the majority of earnings season. We have Apple that still is going to report, not this week. I believe it's next week or even possibly the week after that. I believe it's next week though. And that's going to be another big one, but Microsoft and Google are definitely going to control the broader indexes. Last but not least, we do need to cover this specific data point that will be coming out on Thursday. We've talked about this for months now, literally months now, because it could have such a big outlying effect or outsized effect, maybe I should say, on our markets. That is going to be Thursday's Q3 advanced readings for GDP. So you're expecting 4.1% GDP for Q3. Last quarter was 2.1%. Some people are forecasting 4.7%. So this would be a wickedly strong GDP report. Now, on one hand, that is great because the economy is doing fine, and that would be basically your definition of a soft landing at that point. If we do get a really good GDP report, it would show we're really not heading into a recession, but it would likely drive bond yields higher. So what we've seen in this market is good news is bad news. If you get a 4 reading on your GDP report on Thursday, that could be seen as really bad for interest rates and really bad for any prospect of getting rate cuts. So that's a possibility. But then if you come in at like 3%, the markets might be excited on that. Yields might actually come down off of that, and that could be good. Now, if GDP were to come in really low, say 1% in the low 2s, then the markets might say, hey, maybe we're actually slowing faster than we thought in the economy, and stocks might actually sell off on that as well. So you don't want to see too good. You don't want to see too bad. You want to see something lower than the expectations, but not too low. And I do think obviously at this point, there's probably going to be more Middle East conflict markets are going to be reacting to. Markets are going to have multiple days for yields to play out. If yields fall this upcoming week, well, that's going to be probably good news for stocks, unless it's the safety trade that's winning, in which Friday you did see investors buying the bonds. When they're buying the bonds based out of fear, that's usually not great for our markets as well. But at that point, you're also going to have earnings like a Microsoft, like a Google that already came out on Tuesday. So this is another data report that could be a black swan event, just depending if it comes in really good or really bad. It could cause a lot of downside for our markets. Again, if it comes in too high, above 4%, that could be a black swan event, a really bad piece of news for bond yields, and bond yields could rocket higher. That would be really bad for equities. Or if it comes in way lower than the estimates, which is a possibility, then that could be kind of a black swan event in and of itself, because why were economists so wrong? Are we really, heading into a recession quicker than we thought? So there's a lot of potential outcomes here this week. Overall, I'm not feeling too confident with the, earnings setup that we have. Markets are expecting 24% EPS growth 2024 and 2025. That's insane. 12% back to back at a time where rates are 5%. I just don't think that is sustainable. I think there needs to be a revaluation or re-rating of valuation. So earnings is going to be important to see if that actually does happen. If earnings come in, lower than expectations, I'm just not excited about earnings. I'm not excited about the prospect of the economic data this week. I'm surely not excited about this Middle East conflict. That could be the worst thing we have going for our markets right now. There's just not a lot to be excited about. But if you are a Tesla stock investor, hopefully Tesla does fall a lot so we can buy shares at much cheaper prices. I do think right now is a good point to be getting into, more positioning into Tesla. But it's one of those situations where if you have 10,000 to put in Tesla, maybe putting 2,500 in now, 25% would make sense. If you fall again to 180, putting another 25% in. If you fall to 150, put another 25% in. If you fall to 130, if markets really got bad, put another 25% in. I think that's probably the best way to trade this, or just, leg into your position. But in the short term, you probably do see a bounce in Tesla. That could take Tesla around that 230 level. That wouldn't surprise me, but I don't think that is a sustainable bounce. I think it would just be a bounce. It would be short-lived, and you would probably fall back down to even lower levels. Maybe I'm wrong there, but I just don't see a whole lot of room for stocks to rally here, and Tesla didn't exactly get good news on earnings, so I just find it hard to believe that things are going to be good from here for the broader markets, for Tesla, at least within the next, month, 2-3 months, until we get clarity on this conflict, when or who's going to get involved, until we get past earnings season, until we get a re-rating in, earnings expectations or economic growth expectations, or just get bond yields falling. Until something bullish happens, it's hard to be bullish right here. But that's just my opinion. Let me know what you guys think about all of this information down below in the comment section. Hit the like button, as well as subscribe to the channel if you guys want to be notified each and every single time a new video is put out. Hit that notification bell as well. Again, if you guys want to come trade with us live in real time, come join a community of over 50 members sourcing ideas and trades each and every single day. Well, come join us. Link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.